Cardano's ADA has jumped nearly 10% in the last 24 hours. In today's video, I'm going to be sharing my technical analysis on ADA and where I think the price action is heading next. As I get into today's video, smash the like button if you're new, subscribe, and let's take a look at what's going on with Cardano. So here we have ADA paired up with USDT. We are on the kind of 1 hour Binance chart here. We're going to start things off on this particular chart. Now I'm recording this at about 6:15 UTC AM, that is. So obviously this is about 2 hours 45 minutes before the video goes live. So of course we'll have to probably see a few changes, but on the smaller time frame. But I think for the most part, everything that I'm going to cover today should be valid by the time the video goes live. We'll obviously expand this up into bigger macro pictures towards the end as well. Okay, so the first thing that we need to see here is that we are tracking very nicely here. So we scoped out a long position down in our Discord server in the profit pit. If you're not familiar, basically join the free Discord linked in the description down below. If you've signed up to one of the exchanges using one of our affiliate links, whether that's BitGet, 𝗕𝗄𝗪, Blowfin, BingX, etc., then you can gain access to an area in the Discord called the profit pit. In the profit pit, I share my exact moves on what is going on when it comes to the trades that I'm doing. I actually traded 3 different assets last night. I traded ADA, this particular move, in fact. I traded XLM and I traded RSR. Okay, all of which I took hefty profits on this morning. Okay, so well worth checking it out if you haven't done so already. Of course, if you're unfamiliar or a little bit confused on it, join the free Discord and you can ask questions down there as well. That's where we hang out pretty much most of the time, by the way. So here we had this good move to the upside. The move that I was looking at was basically a long position down here. My entry was not perfect because I didn't get a chance to catch this wick. So I entered approximately around here, somewhere like 8.8. Was that 0.7 97 point something, somewhere up here. Stop loss was relatively tight and I targeted out 1.55 on the take profit, which it completely smashed through and obviously rejected here. Now, why was this trade important? Well, this trade was important because we scoped out the wave 4 low point, okay, and the wave 5 high point based on that move. Okay, so we see here a 3-wave correction to the downside, and then we had that move to the upside. Now, this is actually something in the comments section of yesterday's video, I think, or the day before, where I'm being questioned about why I'm talking about $2.27 being a key area and the Fibonacci levels. So I want to spend just a little moment here to talk about the Fibonacci levels and why they're important. So I have on here a Fibonacci retracement tool, right? Which is how I scoped out this low level. Now, in order to do that, there's a couple of things you need, right? You need, first of all, a Fibonacci retracement tool on your chart. But the other thing that you need to do is obviously check the settings on this, right? So if I go to the Style tab here, you can see my settings on the chart. Now, in here, you could pause this and you can see all the numbers. I also removed all the colors and turned them white. That just makes it easier for me. Since I had laser eye surgery, the color red, I find quite difficult to read any text that is in it. So I had to get rid of all the red colors the best I can off the charts. So I've gone white, as you can see, and these are the numbers that I use, right? And you can see the ones I deactivate and the ones that I have activated. But there's a setting in the Fibonacci chart right down here at the bottom, which is really important for my charts, which is fib levels based on log scale, right? And you can see that this is ticked. By default, it is not ticked, right? If you look at that Fibonacci chart there with it not ticked, and then I tick it, you can see those numbers change, right? They're changing because of how the calculation works on those particular levels of the Fibonacci. Okay, now this is important because if I remove that off the chart, down here in the bottom right of my trading view, you can see that little L, that's logarithmic. If I turn it off, and you won't notice much difference here on the 1 hour zoomed in view, okay, but if I turn that on and off, you can see it's changing ever so slightly, right? If I pull that into auto, turn auto off and just zoom out of this, and if I zoom far enough out, you can see that on a logarithmic, you can kind of see and make sense of everything. If I turn that off, you can see how it just shifts and changes all of those movements. It makes it harder to see, right? The important part here is that because my chart is in logarithmic, I must make sure that my Fibonacci tool is in logarithmic. If it is not, I'm going to get wrong numbers essentially. Okay, so my chart is in logarithmic view right here. Okay, and I'm going to come into my settings of my Fibonacci, and I'm going to turn this off for a second and then just delete that. Now, if I was trying to measure this distance for this entry into this target range with my Fibonacci in the incorrect settings, my numbers are going to be ever so slightly different. So for example, I'll measure this distance here, I'll pull it over to this level here. You can see that the numbers they're not that far off, but they're slightly off, right? They're far enough off on this small scale. Now you can only imagine what that does on a daily scale, right? On a daily scale, it changes things quite dramatically. Likewise, if I'm going to be targeting up here, a decent level, I'm going to be looking at this slightly differently. For example, you can see that my target range was actually lower, right? But on this Fibonacci tool that is not on logarithmic, it's actually projecting higher targets, right? So my targets on my logarithmic Fibonacci comes in at $1.5 to $1.7.66, right? But here it's actually $1.5.9 to $1.8.68, and that's on a small scale. On a daily chart, that expands exponentially. Okay, so let me actually go ahead and select the correct tool, delete that one off. If I just briefly come to the daily chart just to kind of showcase this in action, you can see here that I've got a Fibonacci chart already on. The 1.618 comes in at $2.27. Okay, now if I go ahead and try to do the same thing with a different Fibonacci that's not based on logarithmic, it's going to give us very different targets. Let me go ahead and move that over to our low. Our low is coming in at 27.5. Let me see exactly, 27.56. So I'm going to go ahead and do that. And then here you can see that let me find the right one. Our targets are coming in actually significantly lower. They're actually coming in at 147.23. So in this particular case, you can see how those numbers, they're just completely different. They're completely incorrect, right? Some of these are going to give you targets that are higher. Some are going to give you targets that are significantly lower, right? So in this particular case, if we were using the Fibonacci tool incorrectly, then we would be saying that our 1.618 target is $1.47, and it's not. That's not correct. Our actual target is $2.27, higher, right? So it's actually harder to achieve than it is on the incorrect terms. So if you're not using the Fibonacci tool in the correct setting for your chart, then you're going to end up with different results. But the same is also vice versa. So you've got to use it correctly. Okay, so that's problem number one, why you might be getting an incorrect target. The other way is that if I go ahead and draw this on, is that you're not moving the Fibonacci tool either. So if I go ahead and snap that into place, here you can see that if you don't move it and it's not on logarithmic, it's saying 1.618 is at $1.17.53. Okay, if I go ahead and change the settings on this, we scroll down and we put it into logarithmic, put that on, it's actually at $1.81. So you can see how if you don't use the tool correctly, you end up with so many different targets, so many different price levels that are supposed to represent the same level. Okay, so what you're supposed to do is measure the distance of your wave 1, pick up your Fibonacci chart and move it over to the bottom of wave 2, which so happens to be 27.56. Okay, and I'm going to put that right there, and it will give you the target of $2.27.19. If you don't do those things, you're going to end up with very, very different results. Okay, so I wanted to just address that quickly. It was a comment in one of the videos a couple of days ago, so I thought it was important to kind of cover that off. Okay, so anyway, back to the main story here. Fibonacci tools are obviously quite important for that. Now, that's how I kind of scoped out these targets. It's how I knew that we were going to end up in this wave 4 low point to target out the wave 5 high point, and why I was able to trade that for significant profit, right? So trading those kind of moves are very, very good, very lucrative. Taking a look at this, I would say there's potential reversal here, but let's take a look at our momentum starting to shift on down. So we might start to see a bit more of a cooling off before we get into the next big moves to the upside, because we are still looking for bigger bullish movements to the upside. Okay, so this 5-wave move that I've tracked, I think is a wave 1, meaning that we are going to be looking for a wave 2. So we can now kind of scope out what that looks like using the Fibonacci tools. Okay, now I feel that I'm forgetting to mention something else that someone else wanted me to kind of cover off. You can let me know in the comments what I'm forgetting, because right now I can't think of what I was going to cover off today. But anyway, nonetheless, you can see down here that we're basically going to be moving back down towards the 200 EMA. So that's going to be the target range that I'm going to be personally looking at for our wave 2. So as you can see, our wave 3 is still set up quite high. We are still looking for 123.24 to 137.03 on the wave 3 high, but we are looking for a 5-wave move. Now, if this is a wave 1, this is a wave 2, comes back down here. Our wave 3 should be pretty significant. 4, 5, we might actually breach slightly higher than that range of expectation, but of course we'll have to see how that kind of goes over the next little while. But for the most part, on our 1-hour time frame, I think our next move should be to start thinking about short positions. So let's go ahead and check what is going on with the relative strength index. Also, actually giving us still more bullish vibes. That's perfectly fine. MACD histogram, this is where things really get interesting. Let's zoom in on these most recent movements and why we should be a little bit concerned. So we are seeing divergence here. So the divergence is essentially that we have higher highs on our price action whilst our histogram is actually decreasing here. Okay, now you can see that we have a decreasing histogram aggressively as we push up into higher highs. This is bearish because it shows that there's weakness in those moves, so we're likely to see reversal. So not only are we likely to see reversal from that 5th wave high, might extend a little bit, but we should be thinking about a retest of the 200 EMA and then looking for another push to the upside once all the momentum starts to shift back into more bullish territory. Over the weekend, everything could of course change. We could see basically big resets on very minor price movements, so we'll be monitoring those situations as well. But the next kind of trade idea that I have in my mind will be kind of thinking about short positions and trying to target out that 200 EMA on a 1.5 risk reward ratio. Something to this effect should be sufficient in my opinion. Okay, so that'll be kind of the idea on the 1-hour time frame. Are you ready for an epic opportunity? Blowfin is hosting its whale campaign 2.0, and the prizes are absolutely mind-blowing. From an Apple Watch SE to a Tesla Model 3, you can win incredible rewards just for trading. Let me break it down for you. Here's how it works. By signing up and trading on Blowfin, you can unlock amazing rewards based on your trading volume. The more you trade, the better the prizes. And the grand prize? Well, a Tesla Model 3 worth over $16,000. This is your chance to drive off in style while boosting your trading game. Let me walk you through the prizes. Trade 3 million or more to get an Apple Watch SE worth $125. Hit a trading volume of 15 million to grab a Herman Miller chair valued at $650. With 25 million in volume, you'll take home a Canon EOS R6 camera worth $1,250. A trading volume of 50 million gets you a travel fund of $2,500. Step it up to 100 million and you can win a Kawasaki Ninja 650 motorcycle valued at $4,449. And for the ultimate reward, a trading volume of 300 million will get you that Tesla Model 3. Wait, there's more. Blowfin is also offering up to 10% cashback on your deposits and up to a $500 future rewards bonus for the first 100 users to sign up. So you get trading rewards and incredible deposit bonuses. Here's how you can take part. Sign up using the exclusive link in the description down below. Start trading on Blowfin during the event period of November 23rd through to December 7th. And basically, step 3, watch your trading volume climb and unlock amazing prizes. Don't miss out on this once-in-a-lifetime opportunity to win these incredible prizes, including a Tesla Model 3. Click the link below, sign up to Blowfin and start trading today. Let's see who drives away with that grand prize. This is a promotion direct from Blowfin. This has no affiliation with YouTube or Cheeky Crypto. For all terms and conditions, visit the link in the description, and happy trading. Okay, let's go ahead and roll this up into a daily time frame. So on the daily time frame, what we are looking for here is to complete out the wave 3, right? We still haven't completed it. So we are looking for those higher pushes to the upside. And what we're tracking essentially is we're finishing wave 1 of wave 5 of wave 3. Like I say, Elliott wave can be a very complicated subject, which is why I put together the Elliott wave course over at cheekyschool.com. And of course, I try to run as many kind of discounts on that as possible. Usually links links in the description down below, or just ask me down in the Discord server for a coupon code. I'm sure I can sort you guys out if you want to learn more about Elliott wave. But essentially what we're tracking here is completing wave 1 of wave 5 of wave 3, okay, as we kind of progress through the time frames. So here we have a wave 3 that will be looking above kind of, 122, I think it was, or 127, towards kind of 137, into that range, before cooling off into the wave 4. The wave 4 could be a little bit hurtful for many retail investors. And we will be looking, at the moment at least, kind of an idea would be to kind of be thinking around 64 cents to 93 cents. But, we'll have to see how that kind of plays out. Ultimately, we're on a very bullish path for ADA, and things are still looking very, very good. Now, coming into our histogram here, you can see that the histogram is cooling off as we're pushing up as well. So there is some divergences being noted here as well in the bigger macro daily time frame. So we want to be aware that we have another push to the upside, yes. But that move to the upside is also going to be a little bit, kind of misleading to retail investors who aren't paying attention, because what we're going to find is, although we're going up into higher highs, which a lot of people kind of have that perception is insanely bullish, actually is going to be bearish because there's lack of momentum pushing it higher. And in fact, what we're going to find is profit taking, and then the market's going to drop on them. Okay, so this is how people get trapped in their positions. So as we think about this wave 3 peaking and that wave 5 on the smaller time frame peaking, then we want to think about this momentum and how that momentum is shifting and changing. Taking a look at the divergence indicator, at the moment there are no divergences, but we could see bearish divergence quickly form here if we have a higher high in price and the relative strength index fails to push up into a higher high. Again, you've got the MACD histogram that's going to give you bearish divergence, and a relative strength index that's going to give you bearish divergence. Getting the two things to align, and I think you're going to be in a position to think about short positions on the daily time frame. Okay, so we can be long for now, but I think once we kind of finish this off, we want to be thinking about those short positions. You can see some bullish cross on the stochastic RSI, indicating that there is momentum now shifting back to the upside for that fifth wave movement. So we can see that there is still progression to the upside. We are going to be continuing the moves to the upside on the kind of smaller time frames, and in fact, we'll have a higher high on the daily time frame, in my opinion, and that is going to ultimately lead us to those bearish divergences, which will bring us into our wave 4. Okay, so everything is kind of tracking out quite nicely for this, and of course we are then looking for another push into our wave 5 high, going up quite significantly. We do want to cross $2.27 in order to really get into that wave 3 point. So in an ideal world, we're going to want to see some overextensions, otherwise we're going to fall short of this. Now it's not too bad to fall short, but I don't want to. I want to kind of see this hit 227 for that impulsive trigger point. So there's one of two ways that can go. We can have a big explosive wave 3 finishing, a big wave 5 kind of overextending what it would normally. A big wave 4 drop would also allow for a bigger wave 5 to hit the 227. So we want to be aware of that as well. Or we get a big overextended wave 5. I'm not fussed about how this happens, but I am concerned that the wave 3 hasn't progressed as much as I would have liked it to, and it is sitting between 1 and 1.236, which would typically only represent a zigzag pattern. So if we can't get above 138, then I'm going to be quite concerned. Not necessarily concerned in the way that we see like massive worry about ADA not hitting its long-term targets. It's just going to be a diagonal ending pattern, in my opinion, which will take longer to play out. Okay, so good moves coming, in my opinion, for ADA here. Some good progression has been seen. We've got lots of nice things, I think, to come in 2025. I just would rather we had a nice, clean, impulsive structure rather than a diagonal-based structure, which would be very different. If I find some empty space, I'll show you the differences. Okay, an impulsive structure would be nice and neat and tidy, and it would look like this. A unfortunate kind of diagonal based pattern would look more like this. You'd have your ABC up, let's just say WXY down, another ABC upwards, and then another WXY down, for example, and then a final kind of ABC upwards. This would be deemed a 1, 2, 3, 4, 5 structure. The wave 3 in this particular example, if we didn't hit past the level of 1.618, then actually the only way that this would happen would be under a expanding diagonal based pattern at this stage. So it would be very explosive towards the end of the bull market rather than at the beginning of the bull market. You can see how this one is kind of nice, neat and easy, and kind of, nice kind of one to follow. And this one over here would be more complicated. It would be a lot more profit taken happening, and it would all very choppy, and essentially, I guess, market sentiment will be all over the place during those kind of movements. So it's less than ideal to do something like that, but something that we need to kind of consider nonetheless anyway. I don't know what I'm doing, so I'm going to go ahead and remove that off the chart there. So yeah, for the most part, that's kind of what we are looking for on ADA. So we want to see an impulsive run rather than a choppy kind of diagonal based run. But nonetheless, 2025 is going to be a very good year for Cardano in my opinion. But that's all it is. Just my thoughts and opinions on the data in the charts as I personally see it. What do you think? Let me know in the comments down below, or join us in our free Discord server and we can continue the conversations down there. If you found this video helpful, smash the like button. If you're new, subscribe, and don't forget to check that video out right there. It's not one that you want to miss.